Catherine Vesnes here, CEO and founder of MD Financial Advisors. Welcome to another issue of More Money Minutes for Doctors. If you are a doctor who's currently doing a side gig or you've got some 1099 income, you're going to want to listen because I'm going to be talking about using a Sep IRA or a solo 401k, kind of going through the pros and cons of each to show you ways that you can shelter some money this year. So stay tuned. In the meantime, please like and subscribe. It really helps us get our message out to more and more doctors. So this is a recording for all of you doctors who've been doing side gigs. And one of the great advantages with side gigs, as you know, is that we can shelter some of the income. So one of the things we want to do is talk about when do you use a solo 401k versus a Sep IRA. You're going to see in a minute, there's pros and cons to each. First thing, though, you have to have 1099 income. So this won't work with your W-2 income. That's subject to another kind of withholding, another kind of retirement plans. But this works well when you have 1099 income. And to be frank, it works best when you don't have any employees or maybe your spouse. It's you and potentially your spouse. The reason I say potentially your spouse is if you do bring your spouse in, and we do that a lot, the spouse will have to pay some Social Security on their earnings. So sometimes it pays off, sometimes it doesn't. So with a solo, once again, 1099 income, no employees. Now, it may require in the industry what we call a TPA. A TPA stands for a third-party administrator. A third-party administrator does a lot of testing for IRS purposes and Department of Labor purposes and files some necessary forms. When these accounts get larger, we strongly recommend having a TPA to do that. Smaller accounts, they don't usually need a TPA. Now, that means there can be additional fees for a third-party administrator. These are just some very typical fees that we see, about $950 in the first year, $500 or so in years 2 and going beyond. So you can see you're going to need a larger account in order for this to really pay off. Now, one of the advantages of a Sep IRA, though, is we never need a TPA, yay. And that means that we can save those setup fees and we can also save those ongoing fees. Big, big, big plus. Now, one of the many reasons we love solo 401ks is because it still allows you to do a backdoor Roth IRA. Now, I know this is a little complicated. I'm going to hit the quick and dirty here. The IRS says if you've got some IRAs that have never been taxed and you want to do that backdoor Roth IRA, the long and the short of it is you get double taxed on your backdoor Roth IRA, which in my mind defeats the entire purpose. But hello, they've got a lovely little exemption. If you take your old IRAs that have never been taxed and roll them into a solo 401k, once again, you have to have 1099 income in order to do that. Guess what? You no longer have an IRA. And for whatever reasons, the IRS has said you're fine to do a backdoor Roth IRA in that situation. So we do like solo 401ks for that amount because it helps clients get more money in that tax-free bucket. Now, unfortunately, if you have a Sep IRA, we cannot do that backdoor Roth because this is an IRA. We don't want that double taxation. But sometimes we occasionally use something called a non-deductible IRA instead. This means that we can put money into an IRA that's never been deducted, so you've paid tax on it before it goes in, and then only the earnings will come out as taxed later. That does work for some clients. Also, if you're concerned about getting money into your Roth IRA accounts and you have a Sep IRA, then we can take some funds out of this every year, pay the tax on it, and then get them into a Roth IRA. So there's more than one way to skin the cat of getting some funds into Roth IRAs. Now, some of the limits. This is for 2023. There's an employee limit of $22,500. Now, you can play catch up if you're over 50. However, keep in mind that if you've got a W-2 job, you can't do $22,500 in your W-2 job at the hospital and another $22,500 in your solo case. So we have to make sure that we're not overfunding this from the employee standpoint. But a big advantage here is we also get something called profit sharing. And that's fantastic because when you add all of these up, that can put in about $66,000. And that's lovely because that could be $66,000 that you're not paying tax on this year. So if you're in California or New York or Minnesota, some other high tax state, depending on how much you're earning, you could save $20,000 or even $30,000 in taxes, which can be a huge, huge savings. Now, on the downside though, solo 401ks, when the accounts get over 250,000, have an administrative form that must be filed. It's called a 5500 EZ, and that needs to be filed every year. It's kind of a pain, but it's only 2 pages. It's not horrible. We can get you the information to file it, or we can get it to your accountant to file. Now, with a Sep IRA, you have to be 21 or older. And if you have employees who've worked for you 3 out of the last 5 years and they've earned more than $750 a year, then you're going to have to match for them. So whatever percentage you're putting in for yourself must also go to the qualified employees. So once again, this works great when you have no employees at all. We don't have to worry about that. And it does still have that same $66,000 limit. So we could shelter $66,000 from taxes. Now, solo 401ks have a lovely catch up for all of our doctors over 50 of $7,500 per year. Sep IRAs don't have that, so we don't have a catch up for them. Now, contribution formulas. Once again, as long as you're making up to $22,500 and your only income was 1099 income, you could put all of that into a solo K. Remember, we've got that catch up if you're of 7,500 if you're over 50. Plus, you can do about 25% of your after-tax wages. By that, I mean after expenses that you're deducting. And you can put that in for profit sharing. Let me rephrase that. 25% of your net profit, that means after your expenses, you can also put into profit sharing, which is how we can get up to that $66,000 limit. Now, when it's a Sep IRA, the amounts are different. You can only do 20% of your net earnings when you're doing it for yourself. One of the great advantages of solo Ks is that you can do something called after-tax contributions. Perhaps you've heard of the concept, the Mega Backdoor Roth IRA. You can draft these documents that allow that. So that means you could take some after-tax money, put it into your solo 401k and immediately get it into your Roth solo 401k or your Roth IRA. Big, big, big advantage, but you do need a third-party administrator to draft the correct documents for you. But it is a big advantage. So that's one of the major reasons we like to consider this. Because you can get in higher contributions in a Sep IRA, that could be another good reason why you might want to do a solo K, or maybe you're over 50, you want to be able to do the catch-up. And it works great when you're probably contributing maybe $15,000 or more every year. If you're only making $500, maybe $5,000 a year, it probably is not worth the hassle. We probably just use a Sep IRA instead. Now, Sep IRAs do not allow any of those Mega Backdoor Roths or any after-tax contributions. And if you're fine with a non-deductible IRA, it doesn't bother you that we can't do the Backdoor Roth, this could be a really good, inexpensive option for you because we can keep the costs low and it makes it very much easier and very simple every year. It also allows you to do irregular contributions. Maybe some years your 1099 income is higher than others. That's okay. We can certainly do that with a Sep IRA. So whether you're thinking about a Sep IRA or a solo 401k and you're wondering about whether either one of these would be good for you, please reach out. That's why we're here. We'd be very happy to go over that with you. So in the meantime, if you think this a little recording would be helpful to any of your colleagues, please pass it on because that's part of our mission is to help doctors have a lot more peace about their financial future. In the meantime, take care of yourself. Remember to plan, protect, and then you'll prosper.